My name is Steve Gomez. I am Trade Ideas user number 03. That's my claim to fame. 1998, I met Dan, Jamie a few years later, but Dan came to me in 2002 and said, Phil and I are starting a super secret program and we would like you to be the beta tester. And can you do it? And I said, well, Dan, if you guys could build me a stock that did this and that and showed me in real time, I'm game. And here we are, 15 years later.
Many years later.
Yes.
Yes.
So to cap off the day, we talked a lot with Skip about email tactics and Scott with website tactics and widgets and so forth. But what we wanted to gear the final segment here was how to tell the story in real time on social media for the most part, Instagram, Facebook, and primarily Twitter. And I'm going to show some examples of how Jamie and myself and others, Trade Ideas, try to tell the story throughout the day and create value. Like Marissa mentioned earlier, a lot of our growth is organic. And so since the audience is geared towards affiliates, and assuming many affiliates have trading experience, we're going to gear some content here going forward to show some tactics about how you can really refine the message, whether it's the message of Holly or the message of other scanners and what we're trying to do. So the way I built this, particular presentation is I just want to kind of start on the outline, and I'll touch on a few of, we'll touch on all of them, and then we'll go through some screenshots throughout the day. And my guys here are going to interject
We'll give some feedback.
possible. So I think the most important thing, as I said, is telling the story of your screenshot, because again, we're going to focus on, in the moment as something's happening and I'm seeing something, how can I convey what I'm seeing to the social media audience, quickly and efficiently? And so that's really going to be the tone of today. One of the major things that we do throughout the day is try to explain what the AI is telling us. And Dan so eloquently created the term canary in the coal mine. The AI is our canary in the coal mine. When we all first started trading, there was always one really good guy in the office that we wanted to sit next to, because that was the guy that had it figured out. Well, in this case, that guy or that girl is an unemotional robot named Holly. And having that AI tool right next to us throughout the day is really important. And so we try and tell the story about what the AI is telling us today. Is it telling us to be sleepy? Is it giving us a directional bias? Is it telling us to be active? Is it showing us a certain sector? Is it telling us to get in and get out quick? Or is it telling us to hold on for a lot longer? One of the things I wanted to focus on is creating shareable price alerts for your followers. That's a tactic that could be used in our price alerts. If you're familiar with it, you can set your price alert with your notes and your trigger level, and then pass that on in a cloud link of maybe 5 or 6 working alerts to your audience. And that can be tremendously valuable. And I've done that a lot, and I don't know if a lot of people are doing that. I mean, are you seeing a lot of people using the shareable price alerts?
Oh yeah, oh yeah.
I think it's one of the things that undermines the technological aspect that we do, which we made everything so easy to share. Mm-hmm. And we initially did that for support because as we were a small company trying to help customers, we wanted to have a way where we could just give somebody a setup really fast. And we did that through collaboration and then later the cloud. And now what Steve's saying, I share my price alerts all the time, and it's a great way to exchange information with other users. And this is how I find myself. Again, you get the best of the quantitative, but also the best of the human.
Exactly. People love to be spoon-fed, and if there's a way in which you can share your concepts and your ideas, and it just triggers on their desktop at the same time it triggers on your desktop, that's a valuable tool for people, especially if you've created your own niche and your own style. There's a couple of our affiliates on there. Each night, they will tweet out a screenshot of tomorrow's watch list, and that's very important. They're showing how they're using the product in real time, which brings me to one of the things I wanted to skip forward to is we're trying to make people feel like they're missing out. I mean, to quote Maya Angelou, people won't always remember what you said, and they don't always remember what you did, but they'll remember how you made them feel. And if you're sharing price alerts or a cloud link or a strategy alert, and they click on it, and all they get is a landing page, and they're not a member of Trade Ideas, they feel like they're missing out on something. So I feel it's really important to constantly share your strategies or your cloud links, or even better, a couple of great ideas that you've done your homework on with notes as to why that strategy and that trade is valuable to you. People want that. And the more you click that out there and they click on it and do a dead end and go, God, I need Trade Ideas to make this thing load. I think that's a valuable consideration for people that feel like they're missing out.
Steve, I was actually going to point something out that you just said about the social media aspect of sharing things on Twitter. Steve's absolutely right. And not only do you see pictures of, let's say, our alerts, but people will take pictures of their notes. People say, like, there's a hashtag on Twitter, like $study, for example, which a lot of people pass around in the trading community saying, hey, don't just waste your time, focus on the setups, et cetera, et cetera. But what Steve's saying is, with Trade Ideas, you can not only do that, but you can literally pass your, like, hey, here are my setups. And you have now gotten, through the technology, access to my eyes. If you think Dan is a good trader, if you think Steve is a good trader, or Sean or Jane or Jamie or anybody, you can simply go to their Twitter feed and see some of their setups already there for you. It's like what you said, people are simply missing out if they're not doing it. And if you're an affiliate and you're simply taking pictures and not utilizing the full depth of the technology, you're just missing out, because you can now automate all of that. You don't need to handwrite it. You can literally just do it on the software and you will never miss it.
And that's the genius, is that you're both going to get the alert at the same time using the technology and the shareable nature of it. Many times doing webinars with Jamie and myself, or myself and Andy at the end, if we have time, I'll mark up a few charts and share those alerts. And so it's always something you can give out at the end of a webinar. If you're doing a webinar, you can tease them and let them know, hey, if you guys stick around, guess what? I got a couple of interesting calls, a couple shorts, a couple longs. I might want to share. I'm going to share with you. And if you've got Trade Ideas price alerts, you'll be able to have the alert trigger at the exact same time that we see it. And real quickly, if you're not adept at screen shooting, the way I like to do it, control print screen is your friend. Just start with control print screen and then move that over into Paint. Once you're into Paint, crop the area that you want, and I've got a lot of slides coming up, and this is how we created them, and then tell your story that way. It's a very, very easy thing to do. People need visuals. Just writing down is not always going to cut it.
Steve, I was going to say that there's also a couple of other programs which we'll provide links for, like whether it's Snagit,
right,
or Sniply, I believe is another one. But there's a lot of these tools, and they're very easy to use, and they're effective because you can, sometimes you see something and you're in that moment and you just simply need to capture it. And like Steve said, as simple as, what is it, control-click?
Control print screen is going to give you your whole screen. If you just want your active window, do alt print screen. So I'm old school. That's the way I do it. I drop it into Paint, and then I crop it, and then I mark it up. So we'll get some examples of that. Social media tactics. You really should be linking, and every single tweet that you put out, I try to put out a bit.ly. And so you saw earlier Scott and the Infusionsoft page, or maybe it was Marissa's presentation, where the referral code, and I think there was a funny mention that somebody had been using the wrong referral code for 6 months. My advice is take that referral code and put it into a bit.ly, because people can sometimes see if you've got referral codes and they're full string that have your name, Today Trader, my case, or anybody else's case. They're going to start to see, I'm starting to smell a little bit of salesiness here. So put it into a bit.ly. Not only will it give you a shorter Twitter account, but it kind of hides the fact that it is a referral link and a redirect.
Which is not a bad thing, except for the fact that it could have that negative.
That's what I'm saying.
Right, and it's a perfect reason to do it.
So just make sure that you're always saving, 18 characters or so on Twitter, or if you don't need to, on Facebook, on the others. But make sure you're at least linking your affiliate link. And I would agree. Earlier when we saw the results, one of the better the two best links I think to link to are one, the trade of the week, and also just the products page. When I go at the end of the month and look to see clicks and imprints and conversions, it seems like just I'm sorry, not the products page, the pricing page. Just the simple pricing page alone gives people a view of what the standard and the premium differences are, and they're stamped on your browser once you've got them there. So that's usually my go-to a referral link, just that or the trade of the week if I'm talking about the trade of the week. And then I'm going to bring Jamie in here because Jamie has done something that I want to talk about, finding your voice. I mean, everybody is trying to find their own niche and their own voice and their own way to present data that's unique from somebody else. And one of the things Jamie has been doing is every 20 minutes into the open, and we've got a slide, of course, to demonstrate this, he's starting to talk about the compare count windows, and he's breaking them down based on market cap, small cap, mid cap, medium cap, and then big cap. And he's noticed that within about 20 minutes into the open, he's starting to see some stuff. Maybe give him a little precursor of what you're talking about, and then we'll visually get to that.
Yeah, the compare counts have been around for quite a while. They haven't been getting a whole lot of use, but as of late, the response has been pretty overwhelming. I mean, Bompara, a couple of other people, users are always commenting on how it's helped them change their expectations. And that's one of the things that we always touch base on in the webinars is, you have to obey your rule set each and every day without fail, but you must constantly adjust your expectations, right? So it's kind of like the sailing analogy. If we're going out to sea and all we can do is rely on the wind to get us where we need to go, you better have something there that's going to help you. All right. Of course, in the old days, they navigated by the stars, and who knows how they predicted the wind. There's this term called the doldrums, and the pirates in the old days, or maybe just merchant ships, would get stuck out on the sea for days, weeks, with no wind, and that's a bad thing. Well, most people just dive headlong into the trading session without knowing, hey, is the wind even going to blow today? And if it is going to blow, how hard is it going to blow? And, we, based on our experience with backtesting and what we're doing these days, we know what the odds are every click above 50% and how that affects our success rate. And, let's talk about casinos for just a second. Not to switch topics too quickly here, but roulette, right? Everybody likes to play a little roulette when they go to Vegas. It's kind of passive. It's not quite as intense as sitting at the craps table and trying to do all that.
Not too mentally challenging.
Exactly. People are like, hey, black or red, 50-50 chance, odd or even, 50-50 chance. No, it's not a 50-50 chance. There's this thing called double zero. There's zero, there's double zero. That gives the house just a slight advantage against you. That's why it's there. If double zero came off the wheel, you'd see roulette disappear from every casino on the planet because they would not have an edge. So it's the same thing here. So maybe some of you have had training sessions from me or heard me in webinars. You probably know that I like to try to simplify things as much as possible.
But not during presentations.
Oh, no, not then. But, hey, we were all taught math as children. Subtraction, addition, multiplication, division. We move on to algebra. What do they teach us to do before we try to attempt to carry out those longer, trickier equations? Reduce everything down to its common denominator, right? Makes things simpler, right? Well, why not do that with the market data, right? Why not apply that in a capacity like we're doing in these compare count windows?
Steve, maybe bust a screenshot on that so we can see what Jamie's talking about.
Sure, go ahead, pull it up if
It's
you got
actually
it.
at the end.
Oh, okay.
Well,
So we'll get to it. We're setting it up. and then we're
I'm
gonna set
painting the
examples.
picture. I'm painting the picture. I'm trying to. So, institutional activity in the marketplace. We were just having a conversation earlier about Sean's buddy, whose family member has a job on the floor of the exchange, right? Well, Dan, we went to the exchange in the 90s. It was still pretty bustling back then, right? Busy floor. Well, not quite the case anymore because all those guys called specialists, they kind of went the way of the dodo, right? It's all algorithmic trading. Now, every day, there's going to be institutional buying. There's going to be institutional selling. So these compare count windows, in essence, what we're doing is we're tracking the institutional buying and selling in the opening 15 to 20 minutes because they leave footprints. And we can use these windows to track those footprints and try to get our expectations centered for the day. Oh, well, after the first 20 minutes, I see 52% buying, 48% selling. Well, there's a bias there, but it's not the strongest bias. It tells me there's going to be a little bit of upside opportunity, but as far as continuation goes, you better mind your P's and Q's with your risk management pretty strict for that day, because you might get a good pop, but chances are it's going to roll back over. Of course, there are always those that continue. But if you get into the mode of using these windows, what you're going to notice is, the important levels. Once you get above 55% one way or the other, pay a little bit more attention. You might get a little bit more follow through. But when you start encroaching on the 60% levels and higher, well, we've all seen what happens on those days. And of course, there's no guarantee of anything in this thing called the marketplace. But, it's repetition over and over again. When you start seeing these things, this parallel processor that sits between your ears picks up on patterns. Which is
a good point.
And it's not rocket science either. It's kind of what I like to call distilled data. Let's take data and distill it just like you would distill anything else. Put it in the pot. What's going to be left at the end of the day? And I think Brian will agree with me because I'm stealing from him right now. Price action, right?
Well, Jamie,
Price action.
one of the things that Jamie's pointing to, Steve, is that something, and this is aimed at our affiliates, of course, is that aside from just having an opportunity to dictate some advantageous perception of the market, but for the affiliate perspective, in terms of the compare count, the reason why that's such a good thing is, well, that's our custom data too. That's a technology piece that nobody else has available. And not only does it provide invaluable information, as Jamie just broke down from A to Z, but you're just not going to get that from any other vendor. So one of the things that we're doing here is we're showing you the things to showcase that are not easily replicatable by anyone else. So again, aside from their own value, there's simply the value of no competition.
Right. So we will get to a visual of Jamie's compare count window towards the end, but what I wanted to just remind people, the point here was that Jamie has found his voice because now people are tuning into his account 20 minutes after the open, waiting to see what's going on. And they're relying on that. And he's created his voice, and that's his niche.
And his own following as a result.
And increase in following, exactly. Some more outline ideas before we get into some screenshots. Again, creating images, we talked about that, and GIFs. GIFs can be great. Giphy.com, if you're not aware, is a great place to go on a Friday night and maybe search some themes and just save some GIFs. Don't overuse them though, especially the ones that are just constantly in motion, because they might show up on somebody's tweet deck and it becomes too much and they have to hit the pause button. So use them here and there, but be sparingly. But try and be creative. Try and have some sort of a visual, if you can. If you're not using a screenshot of trade ideas, that is. And then of course the second line. This is social media one-on-one. I mean, I learned this from Howard Lindzen at StockTwits. Be authentic. You are who you are on social media. People can spot bullshit a mile away. Just be who you are. Again, we've ad nauseum, the Ferrari and the $100 bills. People see through that. Don't do that. Find your voice.
I think that's why people like what Jamie's doing, because they can tell he's totally authentic. He still trades, trains, and they understand when he speaks, he's speaking their language. Yeah. And that is really a key.
And so that just bleeds right into the next one. Ask yourself, how can I add value? Am I adding value with pictures of Ferraris and mansions that I've leased for the day? No. But can you add value on what the institutions may or may not be thinking? Yes, we can. And we'll get to that. So again, there's many different ways to present yourself. Present yourself authentically and find a niche that works for you, that you're comfortable talking about, and be repetitive and consistent every day, like Jamie is 20 minutes after the open. People know they're ready for Jamie's compare count windows.
Steve, I
Yes.
just want to, I mean, we've said this at other parts of the presentation, but I want to reiterate the consistency is probably like 90%. And we talked about this with Sean, where it comes about to trading, even on any trading decision or anything else, it's the systematic approach. Don't just try it and not do it. You have to set like a behavior, and sort of like working out or anything else that you do, where you have to do it for it to work. But it works.
Well, yeah, I mean, it's like Wayne Gretzky said, half the battle's showing up.
Yeah.
Right. Lord knows that's how I got through college.
So I did get a bit ahead of myself earlier on the share. Let's play with my laser pointer here. That's not working. Share cloud links. Again, sharing cloud links sends them to our cloud link page, whether it's like, hey, my squeeze trade has just been working great. Here it is. And if somebody clicks into it, and if they got trade ideas, they're like, awesome, that was easy. Well, if they don't have trade ideas, once again, it feels like they're missing out. And we're trying to get them to feel like they're missing out based on what they're seeing and what everybody else is certainly talking about. So cloud links are always a good thing, because one of two things is going to happen. You're either going to create value for one of our users, or you're going to create a feeling of I'm missing out for somebody who might want to sign up. And then lastly, as we start to go through the screenshots here, I think personally the chart gradients are one of the greatest innovations that we've had this year.
It is.
Holly would be the greatest of last year, and the improvements have been wonderful. But the chart gradients, and I'll highlight those, is now using the AI logic and risk management logic to show on a chart and where the suggested stop would be and where the suggested price target would be. Now, for somebody who doesn't have 10,000 hours of seat time like us, they can look at a chart and just triangulate everything and boom. For those people that don't have that experience, these chart gradients are a wonderful way of helping to quicken the learning curve of trying to see levels of support, resistance, and things like that. So,
Steve, I mean, to just add to what you're saying, I mean, this is the part where we really believe we're being very disruptive with the market. We have built the one and only Google navigation for systematic, smart, active speculation. Steve's going to show you the screenshots, but it is Google Navigate, but inside your chart. So instead of focusing on, you know, a wrench or an indicator or some tool, we're giving you the full guide, arrows, lines, everything, step by step.
I wish I had had those chart gradients in 1998. I really
Well,
do.
we're pushing the envelope, and you'll see.
Okay, so let's move on to some screenshots. And again, the idea here is how do you present the story of what's happening? Now, remember, this is all happening in real time, and so you grab the screenshot, cut it down, crop it, and then start to highlight what's going on. In this particular case, I should have highlighted short, but I didn't. It was too late. But the story here, and this is where the AI is the canary in the coal mine. If you're coming in today with your watch list of a bunch of longs, and you look down at the unemotional trader who's sitting next to you, we know as Holly, has been firing off nothing but short sells, and those short sells, it was working a second, and those short sells are actually working into profits. What's that telling us? Directional bias is a major helicopter view of what the AI can show us. And on this particular day, I just had to grab it because it was so unusual. It was about a week and a half ago, and it was definitely a day in the market where if you were going long, you were not probably doing very well. And so having the AI show you nothing but shorts there on the left side, which I should have highlighted, is a great example of directional bias. So your tweet might be something along the lines of, hey, are you going long? Well, the unemotional AIs begs to differ, you know, and something maybe creative, a little bit.ly link, and you're off and you're on your way. Another sector, another bias that the AI can point out is sector. And this was a particular case recently this week. It looks like September 27th? No, 14th, thank you. Regardless of, it doesn't matter. Those four trades, gosh darn it, those four trades on the bottom, they're all energy. And so the story was, all of a sudden, screenshot, Holly's making money, she's going long, and it's only in energy. Are you guys in energy stocks right now? If you are, well, maybe you've got a little bit of extra confidence behind you. If you're looking for some ideas, well, the energy sector just might be on the board now, judging by what the AI is showing us.
Steve, I was going to say, and you might have this in a slide, but I also wanted to just point out that the other thing that we use for demonstration is also the P&L of the AI, which isn't highlighted. It's in the upper left-hand corner of the screen. But this is important because we're the only people, vendors, anyone on the planet that actually show the results of their system as it's happening live in real time. Why do we do that? We do it because we're so confident and because it works. If our AI, which we have out in the market, wasn't working, we could not have the growth that we have right now. We would not be here presenting to you, and none of this would be happening. So one of the big things that differentiates us is that upper left-hand corner where people are like, hey, look at this. These guys aren't just telling us, they're showing us in real time, and they back it up with everything, timestamps, pictures, the whole thing is presented. You can't make it up.
Harumph. Okay, so this time I found another bias of sector, and this was recent, the 28th of September. All
that
four
Friday?
trades on there.
Thursday.
All four trades on there. Biotech or pharma.
Biotechs, yeah.
Biotech or pharma. And
Can
that
we,
was the
Steve, let's
strongest
add
of
the fact
day.
that, by the way, the AI doesn't do any sector analysis that way. All of that analysis is purely quantitative, and it just gets into the right sector because that's what's setting up, and that's the beauty of it.
Yeah,
is
that's
that
all
you don't
price
need
action.
that.
That's all
Yeah,
price
those trades
action
just
derived.
happen to be in that sector.
Exactly. It wasn't
Next
looking
week,
for the
we'll probably
sector.
see something similar. It'll be a different sector.
Exactamundo. I think we got one more AI strategy. All right, well, the story on this one is trade count. You know, I'll take quality over quantity every day. You know, 3 good solid trades versus having to pick through, you know, a bunch of other things spinning through my alerts. That's the story of the day. So just marking up certain things to draw the eye to, the profit on the day, the fact we're 3 for 3, those 2 strategies fired and they're both at 100%. So the point is, you know, find the message, screenshot it, highlight the areas of interest, because, I mean, let's face it, you know, for somebody who's never really seen this before, this is a big Christmas tree grid.
It's true.
And it's going to be improved. This is version 1.0. Yep. More is coming. So once again, the story here on this particular
But it's
one.
the differentiator, Steve, because again, although it's a Christmas tree, right? Where does everyone else show for, like, you know, when we have competitors in our business of subscription fintech services, people have to show something, and typically the only thing they can show is something on a chart that they say, this is the
or
signal.
something that already happened.
Or something that already happened. And we are constantly moving away from that and saying, hey guys, we've got something totally different. We've got a systematic approach that wins.
So, I mean, typically it might be 60 seconds before I see, you know what, Holly's 3 for 3. Control print screen, paste, crop. This is interesting, this is interesting, this is interesting. Here's the story, bit.ly link to my pricing page. Tweet it, Facebook it, whatever you want to do. So that's it for Holly. We're going to start getting into some charts now to try and really bring the eyes together. So there's 2 things going on here. One, we talked earlier about the chart gradients is our new favorite tool.
Come on, laser pointer.
Come on, laser pointer, there it is. The bottom edge of that gradient right there is showing smart stop. Above, way above, is still where the price target is. Now this just happens to be a chart derived from an AI signal because we've got the AI tag right there. But what you don't realize is that now we have a full input-output system in trade ideas. You don't just have to wait for what the AI says to buy or short and then show us what the risk parameters are. I can go in, if I like to trade Tesla, and type in Tesla. Boom. And then Tesla will say at the current position, Tesla will give us a gradient on the chart as to where the buy and sell should be. So the takeaway here is you don't need to have the AI trigger the stock of interest to show you the smart stop or the smart target. You can type in whatever you want now. And again, for somebody who spent 10,000 hours in the chair trying to learn how to read charts, these chart gradients now on every single symbol that we have on every chart really do help ease the learning curve of people to see, oh, I see now why they're using that level as a stop or that level as a price target. But getting back to the story here, this is just a classic breakout, just a beautiful buy on the AI from Holly. And so somebody looking at this chart's not going to really know what all this stuff means, so I have to add a little extra stuff. There's the buy point, that's what we did, and everything else should speak for itself. All about the entry is something we like to talk about, and that is really one of the values of Holly.
No doubt.
You know, our eyeballs and our brains are not always programmed to see buy points, such as a buy point like this, something that opened up, gapped, and crapped, and then basically that blue line right there was the AI entry, and I don't know if you could have nailed it much better onto the beginnings of what I call a gap and go or a horseshoe pattern. Stock gaps up, comes in, chops around, and then starts to go back to highs. Well, we have an alert that would have triggered way up here at new highs, but forget the manual alert that I created back in 2002. We now have the AI saying, this is a much better entry down here based on scatter plots,
The statistics
things that you guys can't see. You know, only
Well, Steve, if I can add to this part, what are investors taught? Don't pick a bottom, right? And so what's really cool about this marketing tactic is you're once again showing people that a lot of the things that you were taught before aren't really right. And like you said, the eyes can't see everything that the machine can see. And we are just helping you find those opportunities that you would otherwise never even attempt. And by demonstrating them visually on social media, it really generates results. Because again, you're not just paint shop proing, this is real stuff.
and then again, that's the story on this particular slide. It's all about the entry. Do you think your mind and your brain would have come to the conclusion that I need to step in and buy right here? Probably not. But the
Hey guys,
AI
and also
sees
something else to point out, we're talking about what's on the charts, but more importantly, what's not on the charts.
not a lot of indicators. I don't
Right?
see any indicators. We're
Right.
trying to wean the public away from the reliance of too many indicators. You know, everybody has their favorite indicator or two, and we'll begrudge them of that.
Yeah, that's
And
fine.
Brian's going to do a great job tomorrow explaining how to simplify using some simple indicators. However, in the same vein with Brian Shannon, Only Price Pays, we're trying to help people look at charts and determine what the footprints in the sand and the volume of those footprints in the sand and the levels of those footprints in the sand are telling us without the reliance on a MACD crossover, you know, Hindenburg, Omen. That all just leads to analysis paralysis.
Steve, let me give you, I want to use Brian as an example because it's a good metaphor. Leonardo da Vinci is a very good artist. He can take a pencil and draw a form, and there are lots of very good artists. Brian and Sean, for that matter, they use technical analysis and generate alpha for themselves, and there's nothing wrong with that. But as you and I both know, it's difficult for people to spend the 10,000 hours to gain those skills. And if you're going to set about recreating that, it becomes more challenging. And what we've done as a business is we've tried to automate all the smart things that we and Brian and Sean and other successful, and Jane and other successful investors do, and we put it in the chart. And that's really all what we're doing. We're not saying, of course, that technical analysis or indicators are bad, but we're saying that they're underneath all of those signals. You don't
Exactly.
have to,
Right,
you
exactly.
don't have to put them on the graph.
Yeah, yep.
That's all
Because
we're-
the stock did that thing, whether the 200-day moving average was there or not.
right.
Right now, you could put all the studies up there and notice a bunch of correlations. But, you know, there's been a lot of innovation. Well, there was a lot of innovation in our business back in the 90s, right? But it was all predominantly on the execution side, right? Or the same platforms. What there hasn't been, where there has not been a lot of innovation, is in the stuff that we're doing now. And it's long overdue. I mean, there's a lot of studies out there that have been used since the markets have been around. And there's these things called computers that have made the scene in the interim. So not to discount any indicator, if it works for you, great. But we're in a new paradigm now, so it only makes sense to try to rearrange the data into something that's a little bit more predictable. And so that's always the overall goal here.
And so this chart is similar to the other one, except on the short side. And again, you know, we've had a long bull market, and buying the dip is pretty much ingrained in everybody out there. And there's probably some great traders that have been only in the game for 3 or 4 years. Well, they're in for a big surprise when when the market turns. We don't know when that will be, but there will be a time when buy the dip turns into sell the rip. All right? And again, if you've been just buying the dip for 3 years, you're going to struggle when things change. I don't know when that's going to be, but at some point, the market's going to give it up, and we're going to have to go back to selling the rip to try and get the edge back in our case. So this is where I feel the AI is going to make a real interesting statement to those people who their whole life, or their whole trading career, I should say, were buying the dip. Well, all of a sudden, it's the same thing on the other side. The AI is saying, hold on just a second right here. This looks like a good fading strategy. And again, I would venture to guess and bet that your eyeballs are not looking at this chart here on this third green bar and thinking short.
Yeah, you're thinking breakout.
You're thinking breakout possibly, but the AI is seeing a scatter plot and data that you just can't see, and is saying, the odds say to short this here at 1608. And this chart right here may not be effective right now, but it was so unique. I haven't seen very much of it lately, but I wanted to grab it because I knew that we were going to have content for today that's going to say at some point in the future, this is going to be the ideal trade. It's the opposite of buy the dip. We're not there yet, but it's coming.
Steve, but you make a really good example on this chart specifically because of what you started, which is you said, don't you wish you had this when you first got into the market? Notice what this chart has and why it's a good referral link. Once again, the tooltips. Notice that green is on the down, red is on the up. You're short. The software is telling you, visualize the fact that you're making money as the stock is falling, and should it go up, it will tell you that you are in the red. These are the kind of things that, again, other people aren't doing because everyone's so focused on the indicators, whereas we are focused on the process.
I mean, people do ask us all the time, great product, when are you going to put indicators on the charts? And we say, well, that's not our focus. There's plenty of other people out there that have great indicators. We don't want to compete with them. We're doing something different, and we're trying to do it in a different way and keep it as simple as possible. All right, so here is a brand new feature. This guy right here, this is a daily chart. This is not an intraday chart. So what this is saying is that on this particular day, it looks like right around the end of August, early September, the AI triggered a buy signal that day. Well, what this is now showing us on the charts is that as we move forward in time, these buy tags are going to show up on charts that the AI Holly has traded in the past. So you can start to see, well, what would have happened if I maybe just sold half and let this little congestion area here maybe work out and let the other half of my position work.
Steve, let me jump in here for a second because this is such a critical part that, number one, I want to make sure everyone knows that, we had just spent some time talking about why don't we have too much stuff on the chart, right? And we said we don't want to put indicators on because they're a dime a dozen. But that buy signal is a historical indicator, but of our own data, right? So that's why you see it, and it's, again, a piece of data that no other vendor will be able to, replicate, which is why it's good to show, but it also demonstrates the fact that we are not in here for the day trading perspective. We are in it for the long term, and where our AI is finding trades for you to buy today, it did that on that day in VERI, and the idea is the patterns are looking for much longer term potential, but we're trying to get you through the day. So, and this version that Steve is showing, it's really just been released. So a lot of our affiliate partners probably need to make sure that they go to the website, download the beta version. And Steve, this one also has the thing that you mentioned before. So Steve pointed something out, and this is a good segue to bring it all together. So this AI signal happened historically, notice on this date, right? But if you were in VERI today, as of this picture, notice the two lines on the top, and the red and the green. So those are the lines that our AI said, well, I had traded this back on that day. But if I was in it today and I just got in, the stop would be at that red line, and the top would be right there. So again, even though the initial entry signal already happened, the AI is continuing to talk to you about, well, here's what it would do now. So it's that constant hand-holding that you're not going to get from other vendors because they have not approached the data the same way.
Well, and this is also great for the people who are under the impression, or potential clients that might be under the impression that Trade Ideas is only for day trading,
Yep.
right? Well, now,
Dan, how far back are those buy signals going to be from a data?
Okay, that's a great question. So how far back does our AI go? So what is the farthest point back that you can see these signals? And we've been asked, the reason this is a good question, because we've been asked, well, can you back test the AI to 1960 and see how it would have done? Well, it doesn't work that way because the AI trades in real time, so nothing that the AI does is actually simulated. It's all in real time, and its first trades happen in December of 2015. So that's as far back as the real AI goes. Now, when we test things, we test farther back in time to see what the prevailing winds are going. But in terms of the buy signals that you're going to see on the graph, it's December 2015.
Good question.
So just an FYI, this stock we're looking at here, the next 5 bars, it went to 75 and then crashed in 2 days back to 40.
Yeah, no, we saw all of that. Yeah, this was the picture here is not a picture up to it was a very volatile stock. It had a negative research report from Citron that came out on it. But the point that we're trying to say is, especially for our affiliate partners, understand that this slide is so critical because it's the perfect demonstration of outsized returns. And these are things that the mainstream financial media tries to really not showcase because, again, the model had been for so long to have your account be in the hands of other people. But as you and your clients and our clients start to actively participate in the market more, what they see is that there is this real potential for outsized returns. You just have to do it yourself because nobody else is going to put you in a stock like VERI at $13 and that's just not what happens in the index world. So,
and whether it's VERI or the next big runner or whatever stock might do something good, we have this conversation all the time. You don't hear it talked about on the financial networks. You don't hear it on CNBC. You don't hear it on any of these guys. So once again, you have our product, you will be put in touch with these types of plays. You don't need those guys. You don't need those outlets. We are, in essence, our own media outlet, but we're delivering it in real time to your desktop. And then we're commenting on it in the webinars.
One of the things I do, and Barry does as well, is throughout the day, at the end of the day, seeing that buy signal on that particular day, you look at that chart and you keep an eye on it for a few more days, and it's still in play. So Holly can also generate a watch list of really interesting stocks that you're not going to hear about in chat rooms or on CNBC or someplace else.
it's a transformative experience, and it helps you see things like, again, the beyond the FANG stocks, the Facebooks, Apples, Netflix, Googles, and things that are being constantly told to people to watch, you're going to see where real innovation is taking place and outsized returns do exist.
So let's downshift from Holly a little bit. Regardless of not having AI, we've had these tools here. One of them, the single stock window on the right-hand side gives you data points, customized of whatever you want. I've got my fundamental stuff over here, my short float stuff here, earnings date, which hasn't filled in yet, and float. But most importantly, this upper quadrant, every time I'm bringing up a new chart, I'm looking at some of these data points. First one, relative volume, 1.9, let's call it 2.0. That means that Twitter was doing 2 times normal volume for the time of day, which was 8 o'clock Pacific time, or whatever it was, that particular day. So as the stock goes to high and everybody's looking at their charts, they see nice green candles and maybe they're looking at the histogram of the volume. But Trade Ideas users can go under the rug and look a little bit deeper. 1, the relative volume on the day, but 2, this is my favorite, 5-minute volume. If a stock's pushing to new highs, 100% equals normal 5-minute volume. That's trailing 5-minute volume, mind you. So if all of a sudden a stock is getting ready to go to new highs or even better, break out of the pivot or resistance level, and you look up and you see 436% on the 5 minute and 327 on the 1 minute, you know you've got a bunch of people that just ran up and got your back. You got a bunch of people interested at this at this stock probably going higher. And that's the kind of little stuff that is, I try to remind people that Trade Ideas users have that the average person doesn't have.
Well,
they just have the chart. They don't have what's happening underneath.
Well, if I can
them.
jump in here real quick, we talk about this once again all the time in the webinars, but you're stacking variables, right? Most people just look for their chart pattern. Oh, there's my pattern. I'm going to play it. Well, maybe the volume was just average or slightly above or slightly below. Your odds of that thing doing what you hope it will do are not so good.
Let's say as an example where my pointer is right here, getting ready to possibly make a new high from the prior day. If I'm watching this, and I look up and the volume's 15% of normal, it's like, whoa, back off. I mean, a penny saved is a penny earned. And that's the same thing that can happen here, digging under the surface and seeing what the 1 minute and 5 minute volume is. So again, the single stock window has been around for a long time, but I think there's tremendous value in using these short-term 5 minute, 1 minute, and
Well, Steve, you're pointing people in the direction, once again, just like Jamie's compare count in the beginning, for our affiliate partners, these data points that Steve's demonstrating are data points that you're not going to see in competing vendor products. Who else keeps a 1 minute average volume? Who keeps a 5 minute average volume as it's happening and constantly maintains it? So it's not just about information that can specifically benefit you as a trader or not, because again, anything can help, but there will be times when it doesn't work. But it's the differentiated information from the point of view of helping your audience as our affiliate. You can show them things through these pictures that Steve's giving you in an example that your readers and clients and customers are simply not going to see anywhere else. I'd like to see a 5 minute volume element on Bloomberg.
And once again, you're doing what? You're making them feel like they're missing out.
They're missing out, right. Where are you going to get that data?
And I mean, reading charts, volume bars, I mean, good luck. It always seems to be after the fact, right? They all look the same. But here, I mean, these are basically replacement metrics for those types of things that you can immediately look at in real time and see the exact value instead of looking at some volume bar going, well, it kind of looks good, or it kind of looks higher than normal, right from the horse's mouth here.
Yeah, again, to me, it's like, I know that I've got a bunch of people that just came up behind my back, and we've got a bit of a small
Well, you're
army.
talking about it from the trader's point of view, and I'm trying to do it more like why the data is so different, and they're both right.
And what we're trying to do is,
Yeah.
is create a narrative volume when you really need it.
And
So
by
here's
the
a
way, Steve,
screenshot.
and once again, the AI is helping you even in these situations by telling you, here's where you would have gotten out, here's your exit. If I'm not in this, because notice there's no buy signal, right? There's no arrow, but it's saying, but should I have been in it? Here's my out.
Mm-hmm.
And again, where else are you going to find that?
Oh, risk on, risk off is not something we've really talked a lot about here, but essentially risk off is exiting at the same time that the AI will exit, whether it's a time stop or a stop loss or a profit save or a reduced risk exit. But here again is a great example of an early trade taken by the AI, but what if the price action of the general market, the spiders and the Qs, was a continued broad-based rally for the rest of the day? Well, the story here was the AI that got you into a wonderful buy signal, once again, time stamped right there with the arrow, feeding the eyes and showing the people where the AI bought it. And essentially, where this green gradient starts to soften up, that's where the AI exited. Well, exiting with her would have been a nice small profit on risk off, but saying risk on means what happens if we keep Holly's entry idea open for the entire rest of the day? Well, I can tell you, if a particular chart is breaking out and there's no resistance on it and it's a broad-based rally, there might not be a great reason to actually exit at the same time the AI does. So it's a gray box in that respect. The exit is on the discretion of the user. And this could be a great example where you could tell your followers, your students, selling half gets rid of the emotional fear and greed demons and let the other half of your position work into risk on for the rest of the day.
But it's all labeled, and that's the cool thing about making this kind of display, is that people really see a framework for going about it versus just hoping that it's right.
Okay, locating a change in trends, share cloud. So this was something I actually did. I tweeted this out that, Shake Shack had 52% short, and it was coming across my trend change lubricant factor, which is Dan's name. And it focuses on stocks that are breaking trends but have a high short float. I'm telling the whole story here. Here's the downtrend. Here's your trend. Stock is 52% short. And here's our pivot level, support, resistance, resistance, resistance. Oh, a little turtle head sticking above here. I tweeted this out. Keep an eye on Shake Shack, 52% short. Short sellers might not want to see this move much higher before they yell fire in a crowded movie theater. And then when you do that and go on record, well, 5 days later, you can say same stock 1 week later, hashtag humble brag, I showed you guys this, and here it was. Now, I know Shake Shack did fall out of bed a couple days later, but nonetheless, we have 5 wonderful days of upside alpha to work with, and it's up to you.
And by the way, Steve, the other thing that this points to is that whole notion that the costs are so low, especially with our partners at E-Trade, Centerpoint, and other brokerages, that there's no prohibition to taking a trade, getting out of a trade, re-entering, etc. This is not the days of $100 commissions and phone calls. So if you are in a stock like Shake Shack, like you had said, and it had gone up that much, you can certainly take some off the table because, again, you're in a
world taking some off the table.
Well, you're in a world where you are going to have outsized returns, and whereas most people think about 6% for the year, we see situations where it's 6% in a day or in a week, and when you showcase that kind of information, people generally are pretty interested in seeing it.
And once again, as Dan points out, there's our input-output. You just type in the symbol SHAK. It was not traded by the AI this day, so you have a blue and an orange gradient showing us the risk-reward from this current point. Risk downside, reward upside.
What's the width of the gradient?
The width of the gradient.
Why are some of them wider and some narrower?
It's because of the volatility, and also because
Side to side.
So this gradient, Phil, so the question was, why are some wider, why some are thinner, and it's really,
Perspective.
it's the volatility of the stock.
But that's the up and down. Why left to right? Does that mean anything?
Which arrows and which left to right?
It looks like the gradient starts back in the end of August.
Oh, all the way back here? Why are these extended?
Oh, okay.
There.
Okay. That's really just to be able to show the gradient, show the lines where they went back. The gradient is just kind of, we didn't want to go too far back, so we wanted to kind of clip in, say, this is the recent area of analysis. That's kind of the idea for the width of the gradient. It's like we're looking at this area, and based on that recent move up, that's why we moved the stop down. And again, I think that kind of information comes out through the Q&As and all that other support that we do. But it's a great question. The important parts are just the lines.
All right. The purpose of this was just a recent slide added in, target hit, spell it out for them, show them. Here's where the AI bought. Again, people are probably looking at this chart for the first time, and all this mumbo jumbo doesn't mean a whole lot to them unless I show them this was the buy spot, and this was the target hit. So we had a wonderful example of the AI buying a nice little pullback there and then actually hitting its target. But spelling it out for them is the name of this particular slide because, again, we've got to orient their eyes to what they're seeing, even though there's no indicators on here.
Well, it also teaches them that that can happen in one day. A target can get hit.
Oh, yes.
And also to take money off the table when you make 8% in 30 minutes, that's a good time to exercise some risk management.
And here's just a screenshot of the example of how I said in the beginning of the onset of the presentation, how you can share your setups. So if I wanted to share these 5 working setups or 6 working setups, I've highlighted them in gray, and the next step would just be simple right-click, share these selected alerts with whoever, copy the code, drop the code into a tweet or Facebook or whatever, and make people feel like they're missing out because, geez, I'd like to know if these things trigger at the same time they trigger for us. So that's just a quick visual of how you could spell out that particular slide. And then I think we are now at
there's Jamie.
the ending example that we were trying so hard to visualize earlier.
Now I'm looking at those windows, and that was the day that we opened, took a little jerk up, and then just kind of swooned down pretty severely.
Oh, shoot. So what Jamie was basically saying is here, in the mid cap to the high cap, there's 4 squares here. The institutional stuff, the bigger and the mid cap stuff, huge. That's a huge discrepancy, 64 to 36. That pretty much set the tone for the day. And 20 minutes into the day, Jamie has found his voice, and he alerted a lot of people and a lot of his followers that be careful on the long side. And this was the particular day where that actually was a good job.
Yeah, it did follow through. And just to recap once again,
Steve, go back to that window, please.
I really didn't tie it together earlier. Basically, what we're trying to do with these guys is, it's like, I like to use the term where the party is, because that's where the volume is. And on any given day, there's only, 15 to 20% of the stocks out there with quote-unquote institutional volume, or what we could just term extremely high volume, where those issues are going to finish the day trading 2, 3, 4 times the amount of shares that they normally do. So, look at it from this perspective. Let's say you want to go out on the town with your wife, significant other. Let's go out and have a good time. Okay, where do you want to go? Well, I was kind of thinking, let's just go to a place where we're the only people there. Right? That's not what we do. We want to go out to where there's other people, where it's a festive time. But a lot of people go to where there's nobody in the trading day. In other words, a stock that's just doing normal volume. Well, I don't want to go too far down the rabbit hole, Steve, here, but, on those days, there's going to be an algorithm running that stock. Now, you want to go fight that thing? Have at it. It's designed for one purpose and one purpose only, and that's to take your lunch money when you come try to play a breakout or whatever else, convergence, whatever, if the volume is not there, the odds are against you. Now, on the other side of the coin, if the volume is really there, well, there's typically a human called a specialist. He's interacting with the technology, but he's moving the markets kind of in the traditional fashion. That's more predictable. You want to try to fight the algo or the predictable human, because it doesn't matter if you're a glass half empty or a glass half full. Truer move or less manipulation, the end result is the same.
Also, I don't like to fight. I like to join. So, I mean, the idea is find the prevailing winds and ride them. But the best part for the affiliate element of this picture, Steve, is that this is, again, a piece of custom technology that gives you additional information you're not going to see anywhere else. Notice you've got the ticker on the bottom that's showcasing which stocks are hitting the low highs and lows. You've got that cylinder giving you the percentages, and you've got the line that's giving you the readout. So we're just creating data on the fly that's different data.
We're creating value.
Value and data that differentiates us from other vendors, and is going to help you convey the message as our partners that this is the trusted platform you should use to accentuate and enhance your trading returns.
And if they're going to see Jamie doing this every day, 20 minutes in, and they're going to start to notice some correlations, and they don't have trade ideas, they're going to feel like they are missing out. So just to encapsulate, we tried to really just show some ideas on how in real time throughout the trading day to grab snippets and screenshots and visuals. Pictures are worth 1,000 words, and show and tell the story as quickly and as efficiently as possible. And that was the purpose of that.
Also, just want to let you guys know, this is our first affiliate conference that we're doing where we're showcasing the ways to work with our technology. If you have questions, never fear shooting us an email. We are more than happy to take to assist people, whether it's from the trading point of view or from the marketing point of view or partner point of view. And we can certainly help you set up the windows, the widgets, all these things, because we've worked very hard at the get-go to make the sharing and the innovation easy. All the things that Steve talked about, creating the alerts and the compare counts that Jamie has done, we continually reiterate the process in our webinars and our education to make it very easy for you to get started. So let's do it.
Yep. Any questions?
Any questions? Thank you very much.